Hello, dear friends and colleagues. Hope you're all keeping fine as the pandemic continues. However, the lockdown is getting lifted and relaxed in a staggered manner as normal operations and normal life perhaps bounces back to reality. In this period of crisis, we auditors have been facing a lot of challenges due to the lack of physical access, so far as accounts records are concerned, and challenges have also been imposed due to the fact that physical verification of current assets, fixed assets, had become almost an impossible task. During these times, the Institute of Chartered Accountants of India, ICAI, has released very important advisories. In particular, 4 advisories have been issued in the last few weeks. First is with respect to physical inventory counting. Second is with respect to subsequent events. Third is going concern. And the fourth is with respect to reporting, audit reporting. I am now taking up the advisory so far as the going concern assumption is concerned. Dear friends, we all know that the fundamental accounting assumption, one of the most important fundamental accounting assumption, is going concern. And financial statements are prepared keeping in view the going concern assertion. Under the Companies Act, Section 134, subsection 5 prescribes that the Board of Directors have to disclose whether the annual accounts have been prepared on the basis of going concern. Now, amidst the COVID-19 pandemic and the crisis, so far as going concern assumption is concerned, certain questions keep coming in our mind. Will the organization which we are auditing, our auditee entity, will it continue as a going concern? There have been substantial interruptions when it comes to purchasing, when it comes to production, sales. Entire supply chain has got hit. So as per the ICAI advisory, what are the basic questions which need to be considered by the auditor so far as the going concern assumption is concerned? First, of course, is whether management of the entity has carried out a review of whether the company or the entity is going to continue as a going concern. The entity's ability to continue as a going concern. This is the first fundamental question which needs to be considered by the auditor. Second, of course, is the auditor also needs to review and consider the nature and the period of interruption of the supply, production, sales, etc. and whether this interruption becomes a substantial, significant, it becomes so significant as to casting doubt on the ability of the concern to continue as a the entity has to continue as a going concern. Management's recovery plan to bring the organization back to normalcy. Now, every company has a disaster recovery plan, business continuity plan, and in case of the COVID-19 pandemic, and also in West Bengal, for example, we have seen very recently devastation and due to the ravaging super cyclone Umphoon. So due to all these things, many of the companies, many of the business entities might think of suspending their operations, might think of winding up, might think of discontinuing their operations. So management's recovery plan, BCP, DRP also needs to be considered. Any adverse changes in the debt covenants for an entity also needs to be reviewed by the auditor, and any bad debts, any credit risk which might arise, and the quantum of the credit risk, whether it's higher than usual level. If so, then this might pose a threat so far as the going concern assumption is concerned. In this process, dear friends, auditors, we need to consider a lot of data information. And as per the ICAI advisory on going concern, we auditors have to consider, first of all, industry reports, analyst reports, third-party studies made. Fourth is any data released by the World Health Organization, that is WHO, and data from reliable government sources as such. So these are the data which need to be considered by the auditor and to apply them in our audit scenario to establish and evaluate whether the entity will continue as a going concern. The IC advisory also covers a lot of FAQs, and specifically 3 action points have been clearly set by the advisory. The first is to discuss with the management and those charged with governance about the impact of COVID on the financial statements. Second is to get sufficient appropriate audit evidence to check whether the management has properly disclosed the impact of COVID-19 pandemic, what impact it is going to cause on the financial statements. Has management given enough disclosure, adequate disclosure? This point has to be reviewed by the auditor. And needless to mention, but very important for our filing purposes, documentation of the entire audit procedure and the audit evidence under ASA 230 need to be carried out immaculately by the auditor. Friends, the ICAI advisory also gives us valuable insights as to additional audit procedures. I am sharing few of them. First and foremost, we need to discuss with the management and those charged with governance about the cash flows, the profit and the forecasts, the predictions made by the management, how the organization will be able to turn around, how the organization will resume operations. So this has to be duly evaluated by the auditor. Analysis and a discussion regarding the latest interim financial statements. This is also important for the auditor to consider. As we know, Accounting Standard 25 issued by the ICAI deals with interim financial statements. We also need to review the minutes of meetings of shareholders and board meetings to check what is the progress when it comes to the going concern assumption, whether the company is going to recover, and what discussions have been carried out by shareholders, by the board of directors and those charged with governance regarding the recovery plan to bring the organization out of the danger and to continue as a going concern. If necessary, we auditors also need to interact and communicate with legal experts, legal counsel, to see the current condition of litigations and the claims against the company and whether the company is going to revert back. Please remember, these also would have a cascading impact on the amount of provisions which the company would have to recognize under Accounting Standard 29 and Ind AS 37. Friends, how the entity is going to deal with unfulfilled customer orders, this is also another important question which the auditor needs to raise. Borrowing facilities. We also need to review the reports of regulators, especially like NCLT, for example, any regulatory action taken by the regulators. And last but not the least is we also need to check the adequacy of planned disposal of fixed assets, non-current assets. So in all, these advisory on going concern, SA 570 issued by the ICAI, deals with valuable points, valuable insights, and gives us a ready reckoner of the action points which need to be carried out. That is on the audit procedure part, the audit evidence part, the communication to those charged with governance, and using professional skepticism and judgment. We finally need to comply with the requirements of SA 570, that is going concern, and this standard has been revised by the Institute of Chartered Accountants of India. Dear friends, this is all so far as the advisory on going concern is concerned. Next, I'll take up the advisories on inventories, physical count of inventories, and subsequent events and audit reporting. Till then, take care, stay tuned.